Good afternoon, everyone. Welcome to Thai Union's Analyst meeting for the first quarter of 2025. My name's Nonwan Kitwat your MC today. First of all, I would like to introduce our key speakers. First, Kun Thirapong Chansiri, our President and CEO. Followed by Mr. Ludovic Garnier, our Group CFO. And last but not least, Kun Pinyada Sangsakdahan, Head of Investor Relations. Today's session will take around 1.5 hours, including the Q&A, and followed by a 10-minute break before TFM result announcements. Without further ado, I would like to invite Kun Thirapong to begin the presentation.
Thank you very much. And hello to our analysts, the investors joining us as well. We have to apologize for having the meeting on Friday. Normally we don't have a Friday meeting. But some of our directors were unavailable. Thus, we had to move it to Friday. So we do apologize once again for any inconvenience. And today it seems like we don't have many people here physically, but joining us online, but that's still good. For the first quarter, many of you probably already know that we have economic volatility, we have sales policy issues, we have the geopolitical tension, we have inflation, we have a weakening global economy, and we also have the issue of the reciprocal tariffs from the US. And that was in the beginning of April. Nonetheless, I believe that on behalf of the management, I would like to say that we are adjusting and we remain flexible. And we will use our strengths, especially in the supply chain. We have our global footprint. We will maximize our strengths. I believe that our strengths in every area that we have will enable us to move forward solidly. We have taken many measures in the recent past year. In April and in May, we have been busier than ever because we have been shipping products out in a higher volume because the window of the 90-day extension for the reciprocal tariffs, there are 43 days left for shipping to our destination countries. And so we have been very busy. And we have been preparing our stocks, especially for our brand Chicken of the Sea in the US. We are building up our stocks at a higher level to enable us to be more flexible in the shorter term due to the economic uncertainty. And aside from this, we see the importance of transformation even more. And we are lucky that we began since last year. Our transformation process has allowed us to have an organizational structure and processes that we are improving and ameliorating. We are focusing on our production costs. We are speeding up production. And we are giving importance to cash. We're looking at our balance sheet to enable us to remain strong in these various areas as much as possible. On the next page, you will see, before we go into more detail, I would like to talk about our performance in the first quarter of this year. You can see that our top line seems a bit weak. It's reduced 10.3% year on year, but this is an organic drop of about 6.9%, and the remainder is from the foreign exchange amounting to 3.4%. In the first quarter, we do admit that whether it's the dollar, every currency, the pound, there's been change leading to our drop in the top line, our gross profit. We have done quite well, especially in the first quarter, which is usually a quarter where we have a low gross profit margin. In the 2023 was in 15% or so, 2024 was a bit higher, but in 2025 we have been able to achieve 18.8%. So this is something that is in line with our wishes. We have wanted to see our gross profit margin continue to increase to reach or exceed 20%. Our operating profit, our adjusted operating profit, not including our transformation costs, which is a one-time item, has gone down by 24.7%, while our net profit has gone up by 8.9% year on year. In terms of our top line, the drop mostly is due to 2 or 3 issues. One is our exports compared to the first quarter last year. The Middle East, we had we reached special levels last year, and so there's been a drop because the Middle East, we're not seeing the numbers as big as they were last year. The second thing is our tuna raw materials are usually in a low level and increase in the second quarter. This year, however, our raw mats in terms of tuna were higher in the beginning of the year, and many of our customers therefore are using a wait-and-see approach. They're waiting to see the drop in the raw materials, and so there has been a delay in our sales. And in addition, we also have the shrimp as a raw material. The prices were quite high in the first quarter, but our pet care business is something that it continues to grow, even though it is not in double digits yet. But in the first quarter, there was a growth of about 5%, which is a positive. Our feed for the first quarter has also performed very well. And our feed business is something that I believe will turn around and be on track. It will normalize. It will do well. We have a net margin. We will have a net margin in a satisfactory level. As for SG&A in the first quarter, the increase has come mostly from our consulting fees for the transformation cost. And another source is the increase in the funding for marketing support. I did inform you earlier that from this year onwards, we will support our brand more and more. And in the first quarter, we have used a lot in terms of funds due to our Eco Twist in the UK. As for net profit, the growth in our net profit, the main reasons for this are we have our investment in Avanti, which has again been very favorable, and we also have the taxes from transferring our Avanti shares from one account to another. Therefore, we recorded this tax, and this is due to regulations. It's not because we wanted to recognize this; it's due to requirements. So on the next page, you can see our transformation costs in the first quarter is at about 287 million Thai baht. We want you to see the benefits as well, not just focus on the costs. The summer costs will end in this year, therefore you just need to wait it out a little bit longer, and these costs will not be, we won't have to worry about them anymore, and we will see a surplus, especially from next year onwards. I want you to take a look at our profit. It's dropping mostly because of our operating profit dropping. We have a foreign exchange negative figures, and the FX gain is minus 183 million. We have our loans. We have our share profit increasing. and we have the deferred tax as well. Our net income, therefore, overall, without the transformation costs, has gone up by 8.9%. And on the next page, we would like to inform you of some changes in terms of our share repurchase program. The board has allowed for a higher amount of money from 3 billion to 5 billion, to also an increase in shares as well. And our repurchase program is still on track, and we expect it to conclude in June. And this again has been approved by the board. And moving on, you can see our project Sonar. Our target savings is $15 million US dollars. And in the first quarter, we have recognized $1.3 million US dollars. And the numbers are in line with the plan. And the number will continue to increase. And we expect to achieve $15 million US dollars in savings. And as for Project Tailwind, for our operating profit uplift, we're looking for $17 million US dollars. We have been able to achieve $3.5 million US dollars in the first quarter. Next, let's look at our credit rating from the Japan Credit Rating Agency, or JCR. We have received a rating that remains at A, and it's a stable outlook. It's not negative. I believe that this is a sign that the rating agency is confident, the foreign rating agency is confident in Thai Union, and Ludo will report more on our success in issuing our blue loan, another round of blue loans. And this is with the Asian Development Bank, which is a bank that is very strict in when it comes to lending. And we have received $150 million, and we also have other foreign banks, 6 banks that are joining ADB in issuing loans for us. And this $150 million US dollars in loans is a special loan that has a special purpose to be used for purchasing shrimp raw ingredients, sustainable shrimp, in fact, 100% sustainable shrimp. And on the next page, you can see that we have also received the first top spot for sustainability from S&P Global. We are in the top percent from S&P Global for sustainability. And this is something that we have done well. It is one of our strengths. It is what diversifies us from our competition. And we continue to work with global partners on this. We also have other businesses or other efforts that we have in terms of sustainability. We were involved in the World Ocean Summit in Tokyo. We were invited to speak at the event. And when the earthquake hit, we also donated water, food, and medicine to the affected areas. And now we'll take a look at the financial performance. So I would like to pass things on to Ludo to provide those details.
Thank you, Kontrapong. Very happy to be with you this afternoon. Welcome again. So we'll start as usual with our 4 years pictures. Even if we acknowledge that in Q1 our sales are a bit soft, we are extremely happy with the gross profit margin development. Okay, if you remember, usually in Q1 our gross profit margin is always the lowest of the year because of the mix categories. I think here we are very pleased with this one. We are just below the 19%. And then regarding the net profit margin, you see we have 2 lines, the dark blue and the light blue. The light blue is the reported net profit margin, and the dotted line in dark blue is the adjusted net profit. And the difference between the two is on the transformation cost that we incurred in Q1. The next one you can see we deep dive on the sales, on the top line performance. So here the reported top line is decreasing by 10%, 10.3%. We are facing a significant FX impact that was expected. When we did release our guidance in Q4 last year, we told you that the negative impact from the FX would be significant during the whole year. Why? Because we were expecting the USD and the euro also to be dropping this year. And this is happening. So we're not surprised with this decline. But also our organic sales have been declining across mostly the ambient and the frozen categories in Q1, while the pet care category has been growing in Q1. So just to explain, having a deep dive by category, the ambient sales are declining by 14% year on year. Just a few things for you to keep in mind. The first one is Kontirapong mentioned that last year in Q1 24, our sales to Middle East were exceptionally high. They were very high because during the whole year 2023, the Middle East, which is a very large market for us, they didn't have access to the USD. Okay, they were facing some currency shortage. In Q1 24, they had access again to the USD. So here we had a catch-up effect, which was exceptional. So the baseline was very high. But also we have been facing a fish price which was higher than expected. Usually in our industry, in Q1, the fish price is always decreasing. But this has not happened. Okay, and when you have a kind of a mismatch between the expectation and the market situation, then very often, as mentioned already by Kontirapong, the customers, they will just wait and see to see what is going to happen. They delay a bit the orders. And this is what happened, and this has created some lower sales for us, mostly in Europe and in our OEM sales. Different situation for the frozen business, frozen declining, sales also by 12% in Q1, mostly in the private label, mostly in the US market. Two explanations from this one. First of all, the shrimp prices are very high in Q1. You can see we have 2 quarters of very high shrimp price in a row, which is a bit exceptional. And the demand is still very soft in the US. Okay, you know one of our key output for us in the food service business in the US, the restaurant industry, you can see in the numbers, the restaurant business is weak in the US. So the demand is still very soft. Same situation compared to what we have seen before. However, the feed business is doing very well. Okay, so please stay for the next earnings call. You have TFM, which will be there. I think we have some very good news on this one. And then finally, the pet care. Pet care is growing by 5.5%. Maybe you did attend the ITEL earnings call. Even if we expect something more and they will deliver more growth in the next quarters, they are growing in Q1 and the numbers are okay. Just a quick focus on the raw material prices. And I think this is one of the key explanations from the soft performance in terms of top line in Q1. You can see the tuna price was around 1,616 in Q1, while we're expecting a drop in Q1. The good thing is in April, you can see the tuna prices are softening a bit. Okay, we are at 1,550. Just for you to remember, for the full year, our guidance is around 1,580. Okay, we maintain the guidance, maybe it will be slightly lower, but for the time being, we stay within this range. I want to draw your attention also to the shrimp prices. On the top right, you can see in Q1 25, the average price was 169 Thai baht per kg, and it was very close to the one we had in Q4. So here, for 2 quarters in a row, the shrimp prices are extremely high. Okay, and when you are facing this situation, then the demand is very soft. Regarding the salmon price, this is the opposite situation. We have a bit of softening. Okay, yeah, of course, the prices are increasing. This is normal for a Q1. You always have this kind of seasonality. However, if you compare to Q1 24, Q1 23, the salmon prices are lower, and this is a good surprise for us. Now moving to the currency, I think what we can say is overall, the Thai baht has been strengthening versus all the currencies. You can see here the change versus dollar is almost 5%. The change versus euro is almost 8%. Versus GBP, it's a bit softer, it's 5.5%. And versus the yen, it's 7%. So of course, for us, this is a key explanation from the very large FX impact that we have in Q1. Again, we do expect this effect to maintain the whole year. Just for you to remember, we told you in Q4 that the overall FX impact, we were expecting a negative FX impact for the whole year. So no surprise, that was expected. The good news is the euro is strengthening a bit since the end of March. So moving to our key ratio, you can see, first of all, the inventory and the net working capital. I think we are under control. Overall, our inventories are increasing in Q1. This is always the case. Okay, just for you to remember, we prepare Q2 and Q3, which is the high season for the sales, especially in Europe. So we are building up some inventory. So this is what we always see. There is no surprise about this one. And I think in terms of inventory days and net working capital, we do remain under control. In terms of ratio, net debt to EBITDA, we are increasing to 4.5, almost 4.5. We do expect to remain in this level in the next 1-2 quarters and then to decrease at the end of the year. So that should show some positive trend by the end of the year. Net debt to equity, we are still below 1. For you to remember, our comfort zone is between the 1 to 1.1. So I think we are in a very good financial situation. So if we have a look at our net debt bridge, net debt is increasing from 53 billion baht to 56 billion baht at the end of the quarter. And the ratio is around 1. The key drivers, we have a negative free cash flow in Q1. Why? Because our EBITDA is a bit weak at 2.4 billion baht. We are also building up our net working capital, our inventories, by 2.2 billion baht. Our CapEx remains under control with 900 million baht. So the sum of the three, we have temporarily a negative free cash flow by almost 600 million baht in Q1. We also have the impact of the share buyback, which is 1.8 billion baht in Q1. So total, we believe our net debt to equity is still very strong. You can see also one thing which is interesting. Our cost of capital is decreasing from 3.7 to 3.5. So here we can see the impact of the decrease of the interest rate. Just a quick focus also on the Avanti restructuring. And this is a bit technical, I'm sorry for that. So here we have been facing some changes in the regulations in India. We are holding our Avanti shares through two holdings, through our Thai Union shareholding and also from our Hong Kong holding. There was some change in regulation in India which forced us to sell the shares we are owning from Hong Kong to India. Okay, we don't change anything. We continue the partnership with Avanti. We have a very strong collaboration. You know, it has been a very successful joint venture over the past a few years, and we continue. We don't change anything. So our shareholding before and after remain exactly the same, 24-25%. So we just transfer the shares from one holding to another holding company. But we enjoy a nice tax effect. Why? Because usually when you have some investment in an associate company, you will have a tax value and a market value which will be different. In accounting, you have to record a deferred tax liability when you have a difference between the two, and that was the case in the past. Now, with this transaction, the tax value and the market value is much closer. So we don't have any more deferred tax liability to be recorded, and we can reverse what we had in the past. So we do enjoy a one-time non-cash positive income tax from that, which is roughly 400 million baht, 380. Don't expect this to happen again. Okay, now the shares in Avanti, they will remain in Thailand. We don't expect any other changes to happen. So we enjoy this in Q1, but this will not happen again. Again, one-time non-cash transaction. And again, it doesn't change anything with the partnership with Avanti. The last one is and Khun Chirapong already mentioned this one, the ADB loan that we just announced yesterday. I don't know if you see the announcements. We are extremely pleased with this one. We have been working with ADB and different banks also over the past few months. This is the first time that there is a blue loan which is being issued in Thailand by the seafood industry. This is also the first financing framework aligned with the Thailand draft taxonomy. So extremely pleased about this one. Here we are focusing mostly on the sustainable shrimps. Okay, so this is mostly for our frozen business. And the idea is to increase the proportion of the certified sustainable shrimps. You know, we are using the ASC, the Aquaculture Stewardship Council, some BAP also, and some AIP. So all of this, the whole idea is to increase the sourcing, the sustainable sourcing for our shrimp business. Very pleased about this one. More to come. You know, we told you in 25, we have quite a packed agenda in terms of refinancing. So this is the first step, and we are very pleased to have this one. Don't ask me about the interest rate. As usual, we cannot share this one, but you know us, we did manage to have a very competitive pricing for that. So extremely pleased, and thank you to the team for achieving this one. And now we let Kun Kwan to go through the business performance.
Thank you คุณ Ludo ค่ะสำหรับ
For the breakdown by business unit, let's begin with the first quarter. As we mentioned earlier, we have let's break down our entire profit sales. Ambient is at about 50%, almost 50%. The frozen business is at 28.3%. And pet care is at 14%, and value add is 8.1% of the total sales. You can see that right now our pet care and value added businesses have sales contributions that are 22%, and this is in line with our ambition of reaching 25 to 30% by the year 2030. Moving on, let's begin with our ambient business. In the first quarter for 2024, we had profit we're seeing a profit of 14% drop year on year in sales, and there's also a 7.1% year on year drop in our sales volume, and we're also seeing a negative FX impact, and the FX impact is affecting every business category. As for tuna, the price of fish in the first quarter, you can see it's 1,660 per ton, and this is an increase which has led to our customers in the private label. They are delaying their orders, and we're going to wait to see what the situation is like. They're going to wait to see what the situation is like and then reorder again. The sales volume has dropped down by 7.1% year on year, and this is a result due to the major markets, the Middle East. In the first quarter of 2024, it was a high baseline for our revenue in this market because it was a period when the Middle East was recovering from a shortage of foreign currency. And in Europe, there were lower sales in France, in the UK, and also in Germany. And this was because of rising fish prices. And our sales volume dropping here, it has been offset by orders that have increased in other markets, thanks to our strategies that we have put in place to support this effect. In our frozen business, we are seeing a strengthening gross profit margin. If you take a look at year on year, it's gone up 2.8% to 19.4%. And this is thanks to our sales efforts and our cost management. Moving on to the frozen business. After we did right sizing, after we implemented right sizing that began in 2023 and concluded in 2024, at the moment for our frozen business, we have a new baseline. We have our shrimp products, our salmon products, and other seafood products, and they each have different sales structures and different profit margins. For the frozen business in the first quarter, we're seeing sales of 8.4 billion Thai baht, and we have our private labels. The absolute amount in growth for the branded is growing, and the dropping sales are due to the shrimp sales that have dropped in the first quarter due to the cost or the price of shrimp increasing by about 20% or so year on year. And our volume went down 2.7% year-on-year due to our private label drop. If we take a look at an offset of this, the business, our TFM business, our feed business, has grown favorably, and this has provided an offset for the aforementioned incident. And we are doing better in gross profit margin has strengthened to 12.4%. And this is, we're seeing improvement in our feed and chilled business. And if we take a look at the shrimp prices at the moment, they are adjusting upwards, but they will, in the following quarters, we expect to see those prices drop. In terms of pet care, we have sales at 4.174 billion Thai baht, increasing, this is 5.5% year-on-year. And this is mostly due to our sales abroad, shipments to the US, for instance. And the volume most strongly, we have the negative FX impact. If we take a look at our premium mix, you can see that there's been adjustment downwards to about 48.7% temporarily. Compared to the first quarter in 2024, we had a premium mix at about 55%. And the market situation and the consumer demand has been changing. Consumer behavior has changed, and our gross profit margin has gone down to 24.5%. It's dropped a bit. We have to, this is due to the premium mix. We had a higher base before, but it's now back in a range, within the range of 47 to 50%, in line with our wishes. And a value-added business, the sales are at 2.4 billion Thai baht. If you look at our value-added packaging and ingredients and our byproducts, we have a drop in sales for the various brands as well. Nonetheless, the sales volume has increased significantly to about 14% year-on-year. This is because of the increasing sales in byproducts such as our value-added products. The demand is quite solid, quite strong in the byproduct segment because of the increasing demand from the consumers. And there we have 27.9% in the gross profit margin because of this is compared to a higher baseline in 2024. And I'd like to pass things back to Khun Thilapong to provide the outlook. Outlook for this round, we have adjusted our forecast a bit based on the 10% flat tariff in the US, from the US. 10%, this increase is increasing, it's implemented for every country, therefore we don't expect much effect. The retail prices, if the tariff increase is 10%, it doesn't mean that it's going to lead to a 10% increase in the prices in the markets. It'll be about 7%. The price at the end destination will not see the absorption of the entire increase in tariffs. Most of our partners are conducting business as usual. And nonetheless, due to the uncertainty, our customers will probably, of course, be waiting, will take a more wait-and-see approach. And our sales growth, we've adjusted from 3 to 4% down to 1 to 3% due to the 10% tariff. And our gross profit margin, we've adjusted it down a bit to be a bit more conservative from 18.5 to 19.5%, adjusting down to 18 to 19%. Our SG&A, we've increased it from 13 to 13.5% to 13.5 to 14% instead, because SG&A will increase a bit. It might be due to shipping or other areas, due to the increasing tariffs as well. CapEx is a measure that we have taken immediate action in. We have reduced it from 4.5 to 5 billion down to 3 to 3.5 billion. We want to focus on cash until we arrive at a clearer situation. We will hold our investment for the moment in areas that are not necessary. The effective interest rate, there is no significant change because we're seeing lower interest rates, and we don't expect much effect. Therefore, we don't need to adjust this much. And our dividend policy will continue to be paid out twice and at least 50%. We would like to provide more clarity for you, because the people outside will say Thai Union's 38% of sales is going to be affected, but in reality, the products that are produced by Thai Union and sent to the United States are at 18%. 20% of the 38% is chicken and sea frozen, for instance. This is bought via other partners in other countries. So there will be no effect because we continue to buy from lower cost sources. So the impact for us is 18%, not 38%, as many people may misunderstand. In addition to this, I would like to speak more about if the tariffs go up to 36%, if that is implemented, what measures do we have? I would like for you to take a look at this page first to see that the tariffs altogether, Vietnam, based on the information that we have at the moment, so right now, Vietnam is at 58.5%, Thailand is at 48.5%, total tariffs, Indonesia is 44.5%, just 4% different from us. The Philippines might look like they have a much lower, they're facing a much lower tariffs. However, this country doesn't have a competitive scale in our industry. It doesn't have much of a share. And Ecuador may receive a lot of benefit in terms of tariffs because it's only a 22.5% total tariffs. And take a look at Ghana and Seychelles. These are two countries in our network that are going to face the lowest level of tariffs, even lower than Ecuador at only 10%. If we take a look back at our businesses, let's look at them by category. For the ambient segment, we will increase our production capacity in Ghana. Ghana right now, it has the lowest cost outside of Thailand, and therefore we stand to gain due to the lower tariffs there. We are also preparing things to Seychelles to be able to take advantage of that. Our lines in the U.S. as well. Our production in America, we are also preparing things there in Georgia. And we will continue to monitor the situation, see how Thailand responds. we will probably have to reduce things in Thailand if we increase things outside of Thailand. And these are the measures that we are taking. We should be able to manage things quite well because we have Ghana and Seychelles. We have ample production capacity there. And we're also looking at Vietnam as well. If Vietnam has a higher negotiating ability or power, we are also ready for that. We are not overlooking that. In terms of the frozen business, in Asia, there is Vietnam and Thailand and Indonesia and India. And I've also added on, in the past year, India and Indonesia, they have faced anti-dumping tariffs. Many may have forgotten about this. Overall, Vietnam is also facing tariffs higher than Thailand. Let's take a look at Indonesia. They have total tariffs at 35.9%, more or less equal to Thailand's 36%. India is facing 34.3% total tariffs, and again, this is not very different from the tariffs faced by Thailand. Ecuador seems to be at an advantage with only 13.8%. However, you need to understand that Ecuador only produces shrimp of a smaller size compared to Thailand or India, and Ecuador's products are raw and commodity products. Our products are value added, they are processed, they are cooked, and therefore this is a look at the competition for us here in Asia. So we want you to rest assured that there is not much of a difference. As for pet care, ITL probably already provided a very good explanation. Our wet-based cat food, the major producing countries are China, Vietnam, and Thailand. If consumers decide to buy dry products, more dry products, or middle range products or lower range products, there will be a difference, but these countries produce premium products, and Thailand still has the lowest level of tariffs out of all of these wet-based food production bases. Lastly, Thai Union has faced so many crises in the past, like, for instance, COVID, and this is another new disease that we're facing. And we believe that the measures that we used during COVID, we are brushing them off and adjusting them. And our focus is we're going to look at our production costs, our cash, and our transformation as well. We have reviewed all of our processes, and this is a good time for us to take a look inside and to improve, to become more efficient, more effective, and more resilient and more flexible. So thank you so much for listening to us this morning.
Thank you very much to our management for the presentation. And now we will move on to the Q&A session. As usual, we will prioritize questions from the floor first. So if you have any question, please raise your hand and our team will get to you. And for those who join online, please send your questions through the Q&A box. Ka.
Hello. Oh, okay. So the first one, may I just ask about the tariff impact? So right now we have the 10% tariff, I mean, all around the world, right? Just wonder, as of April until now, or maybe looking forward, do we see any change of customer behavior on, I mean, whether stocking more of our product or delay some or ask for the support of the 10% or even 36% if it was imposed.
As I mentioned, business still as usual, but the customer now chasing the product to be shipped faster during April and May. And I'm sure everyone is carry more inventory than normal due to the uncertainties. It's like during COVID, everybody prepare inventory, right? So the business still as usual. Nobody talks about the duty 10%. I must say 10%, it's everybody the same. After 10%, nobody talk because nobody knows. That's the situation right now.
Okay,ครับ
Could I ask? I'm not sure if there's an increase in prices, and in industry practice, if there's 10%, you can absorb this in modern trade or from the customers. But I'd like some knowledge from you. If it's up to 36% in terms of the absorption, what will it look like? I believe that no one will be able to absorb that amount. In the end, the sales price at retail will have to be increased, and everyone knows that ultimately the higher price will have to be borne by the consumer. And this is another issue. If the prices go up, then that will lead to lower consumption. That's something else that we'd have to consider. And it will be like after COVID. If you remember, post-COVID, we had higher inflation, whether it was for steel or oil or shipping. There was an increase in prices. This is something that we have faced before. This is just a different disease. Can I ask to expand on that? There may be no absorption, but in your projections, what do you see as the volume? How will it be impacted? How much will it be impacted? Will there be growth in your revenue? Is there a mix? Will you increase the pricing? Will the volume go down? Our price will not increase, is not increasing. You must understand that our prices it's C&F and FOB, and it's like we are importers. The importers have to pay the tariffs. We are not increasing the prices. Therefore, everything is the same. We expect that growth. We said it's business as usual. And if the NPD, your product development of new products that you're going to launch in the second half of the year, how are you going to plan this with your customers? Will you have to put this on hold first? Or will there be new products? Or will we take a look at the tariffs first?
So far, we don't see any decline in the OEM business. I think nobody, as Kunjabong mentioned, nobody is talking about the 36% scenario. Okay, so we have some plan with all our OEM. I'm talking about the OEM customers. That we don't see any people moving away from that. I think they don't believe in the 36% scenario from what we can see. Of course, we also have our own branded business with our own marketing activities and our own NPDs activities. We don't plan to do any change for the time being on that. So we maintain our plan.
I think that our global partners, in our discussions with them, they have expressed that no desire to change any plans with us. And at the current moment, in the short term, product development, it continues on. especially in terms of the pet food, they can't stop. The process of developing products takes many, many months. You can't stop here or stop there and restart again. Right now, everyone is continuing forward, business is continuing forward, and many people believe that things will be adjusted. We continue to monitor the situation, but the global big players, they are staying on course. They are not pulling back or anything. That hasn't happened yet. And in the three categories that you have, when the tariffs, we don't know how they're going to come out, but it looks like for your tuna ambient and your pet food, these are products that are necessary for consumption. Tuna is a low price product. But I'm thinking about the frozen business. Are you seeing any results? The food service maybe has dropped perhaps, and will this lead you to have to do right sizing for just your frozen business and the food service as well? Food service and frozen business, we are working with our partners. Of course, right sizing or the size itself, the volume, the formula, we have to adjust everything to be appropriate and in line and with our partners. We continue to push our markets, not just only in the US. Today, even in the Thai market, for instance, our frozen business is larger than that in Japan. I believe that we can continue to push in other areas aside from the United States. And I'd like to ask about expanding your facilities. You mentioned Ecuador and Seychelles. Is this a long-term plan? Will we be able to see an increase in capacity this year? We're not talking about medium term. We're talking about instantaneous, immediate expansion. In Ghana, normally we produce maybe, for instance, 160 tons per day. We can increase to up to 250 tons per day. This can be done instantly. And 4 days of work, we can increase to 5 days of work, or we can increase to 6 days of work. There is no need to change our capex or add to capex. In Seychelles as well, there is a lot of room for increase in production. We never thought about producing in the U.S. The reason was we're looking at the tariffs. They will have a handicap. The tariffs will lead to production increasing there. Ecuador, it looks like that is a country that is going to benefit from low tariffs, but in the past, Ecuador, they were already benefiting from tariffs to Europe, and they already sell a big majority of their sales are to Europe to begin with due to those tariffs. Are they going to drop their sales in Europe? We don't know. We're just going to have to continue to monitor. And their production capacity is already quite maxed out. It's not just maxed out, and they could increase it, but do they have more fish to do that? And this is something that needs to be investigated. And your raw material sourcing, you have an ample supply, right? Perhaps you have built your stock right now, built it up. But in terms of sourcing in your plans, do you have to make significant changes? Do you have to look to Seychelles or Ecuador? No, for Seychelles, there is no problem. We focus on yellowfin there, but today in America, we have skipjack, which is not hard to source. In Ghana, skipjack is also very easily sourced, and in America, there is no issue with origin. It's even easier if we go to Europe. We're not worried about the supply. Could you tell us about the offset of in capacity, the increased capacity, will this help from Thailand? Is it 5%, 10%? How much when you increase? What will be the offset? Well, how will you mitigate the impact? By how much? I think that we are doing everything we can, and we're not seeing any issues in Ghana or Seychelles. If we increase there, then we will reduce elsewhere, but we will, again, have to consider everything carefully. And the travel costs, the freight, the shipping costs, your customers, you said that they are increasing in the second quarter. Are they going to have issues with finding shipping? No, there is no issue right now. There is no container issue right now. There's no difficulty. Could you provide any guidance about the possibility for extra from the budget that you had forecasted before? Do you expect any extra orders to come in? Will they be a significant level or not? I think that we won't see a high level of extra orders. In the quarter, we don't expect to have to change anything on the quarterly basis. Thank you. Could you provide more knowledge on Ghana and Seychelles as well? Usually, these countries, their production capacity, where do they send their products to? These two factories belong to us. And in the past, these two factories, we had them because of the tax benefits to Europe. And that is why we have these two factories supplying Europe. Before this tariff issue, we were ready to have Ghana send to the U.S. Under a trade treaty with the U.S., using the trade treaty between U.S. and Ghana, it was at 0%. In fact, Ghana could be the source for supply to the U.S. And Seychelles, the cost is higher than in Ghana, so we focus on supplying to Europe. But when, due to the tariff issue, you can switch, right? You can supply to the U.S. instead. Yes, that's correct. And what about the tuna prices? The prices have gone up continuously since the third quarter of 2024 up until right now. After this, what do you expect? We expect it to start to drop. It's already at 1,700. It's gone to 1,550. And in this situation, we expect it to drop even further. This is another raw material that will help our cost drop. It will definitely go lower. We will expect it to go down to about 1,400 or perhaps even lower. It depends on the demand in the market. And what about in your current stock in this high period? Are you using the stock that you have right now? How much longer will it last? For how many months? We have about 2 or 3 months worth of stock, so it's not an issue. Thank you.
Just a couple quick ones first. Just to clarify, the page where you said that 38% of sales is for the US and 18% is from TU facilities and 20 is from non-TU. It's basically just as like saying that 18 is from the Thai factories, right?
Thai factory, Thai union.
Thai union factories.
Yeah.
But they could be situated anywhere in the world, essentially.
Well, it's include Poland, it's include Vietnam, it's include Thailand,
But they all would still be subject to the 10% tariffs, right? Because it's quite blanket at the moment.
10% is everywhere.
So,
Every country.
So in the scenario, let's say, for example, they do put in the additional 36% or whatever, then it'll differ between countries no matter where it's produced. That's correct, right?
We can play with the global network.
Essentially, right.
Basically, right now, Ghana and Seychelles are benefiting from the lowest tariff. So
Correct.
if it is confirmed in the future, then of course we will increase the production there. Correct.
Okay. So you guys are basically just playing defense for if, for example, that scenario does show up.
That's correct.
That's correct, right?
Yes, yes. However, keep in mind, we already started Ghana to deliver the US since last year. Okay, as Kuntirapong mentioned, we don't need to do any significant capex. We are just shifting a bit. Before Ghana and Seychelles, they were sourcing mostly for the European market. We can shift their production partially to the US. That will help us mitigate the impact.
Okay. And what I understand is basically operation is quite normal for you guys because everybody is 10% at the moment. You just send it as usual. It goes to the price point in the US, and then from there it just goes to the consumer basically. So it's just business as usual.
Yes.
Until you figure out whatever happens in the market, you
Yes.
go by ear basically, right?
That's correct.
Okay.
No, but we prepare ourselves
Yeah.
already. Okay. So
The guidance is on a 10% tariff scenario for now, right? But I'm
Yes.
guessing that could change depending how it goes.
Yes.
Of course, it's quite extreme to ask for a guidance if in case 36% does happen. But
well, but as I mentioned, 36% is Thailand.
Yeah.
Right? We still have Ghana, Seychelles, 10%. So that will be blend. We will. ship
they'll be
more.
blended, yeah.
Yeah. So
Okay.
yeah.
Other thing about, just to clarify, the saving programs you have going on at the moment, you have transformation costs that are part of your thing. But you already said that you already realized some savings. I'm guessing in the statement is just like net, essentially, right? What you've saved and what you're spending right now. So as of 25, Project Sonar should end by this year, essentially.
Yes,
Yes.
But then Tailwind will still go on into 2026 as well, right?
that's correct.
At the moment, like part of transformation costs, like Sonar is the majority of it, or is this like maybe half between Tailwind, Sonar?
So we don't share any details between the two, but okay, it's combined between the two. There is no one which is 80%, the other one 20%. So it's quite balanced overall. But we
Okay.
cannot share any detailed number.
But I'm assuming transformation costs quarter to quarter should come down slowly.
Yes,
I'm guessing,
yes.
as you save more, right?
That's correct. You have also some details in the ITL presentation. You have
Okay.
their own transformation costs.
Okay. Last thing is about the buyback. I just want to know what management is looking at in this sense. I mean, you've extended it. In fact, you've increased the one, but unfortunately, share price has still basically stayed at a.
Well, the repurchase program, it's to support, not to push. So
Yeah.
that's why you don't see the share price go up because, it's not the management duty to do that. So we are just prepared to support.
Of course. I understand its support. I think my question is that at this level, do you think you would still do more buybacks after this?
Yeah, I think so. Yes. And
As-
you see, we increased the capacity, right? So from 3 billion to 5 billion, from 200 million share to 445. So it's max.
Yeah, but I'm guessing this won't be like your cap this year, right? If you want to, you could still announce more.
No.
By
No,
the
is this the most you can
regulation,
do?
it's only maximum because they allow the regulation allow us to do 6 months, one program a year. So we have to wait another 6 months.
And is 10% also the max that you can do
That's
per year?
correct.
Yeah.
Per year.
Per year.
Per year. So the 445 million shares is maximum we can do this year.
Yeah.
Okay, and I'm also assuming that you'll most likely write this off as you have before.
Yes.
Okay,
We follow the regulation in Thailand.
of course, I understand.
try to
Yeah,
sell
I
fast.
understand. Thank you.
I just want to ask on page 29, the 20% of the 38% export to the US, you mentioned that it's processed from non-TU facilities. Is this mean, am I correct to, I'm not sure I understand correctly, the sales would be to the trading entities of Thai Union first before to the end users, right? So the impact could be more, right? Because right now, if you're processing from TU facilities, you can sales directly to the end buyers, whereby the tax increase would push to the end buyers. But if you're trading just sales from non-TU to the trading entities, therefore the tax would be absorbing by the trading entity first.
We only buy product from non-TU. Only the case that TU cannot produce, or that particular company or country are cheaper than Thai Union.
Okay.
Only that case. Yes. And mainly for our frozen unit in US, where they can buy from everywhere. In Indonesia, they can buy from Ecuador, everywhere.
They are already buying from everywhere, to be frank.
Oh, okay.
Okay, so it's easy for them to shift from one country to another country, depending on the tariff situation. So we do expect less impact, to be frank, with in the future from the tariff, because it's easy for them to shift.
Clear. Thank you.
Could I ask about the tax that has to be paid? It's about 400 or so million in your budget, and this is your Avanti transaction. There's about 380 million. The net for the first quarter is a tax revenue, right? Why is this? And if we take a look at the entire year, could you provide guidance for the effective tax rate as well? Are you still seeing impact from GMT or not? Thank you.
I think you are correct. In Q1, if you exclude the Avanti impact, we are benefiting from an income tax benefit. This is mostly explained by the small EBIT that we have, which is almost offset by the finance cost. So in some countries, we are temporarily loss-making, and we can recognize some deferred tax assets. However, we do expect this will reverse in the rest of the year. So for the full year, our guidance in terms of ETR remain between the 11 to 14%, excluding the Avanti effect. Okay, Avanti effect, we are seeing just a one-off. You exclude this one, which is 380 million, and we still expect the same guidance we gave in Q4 between the 11 to 14%. Now you're talking about the global minimum tax. You're right, in Q1, we don't have any impact from this one. Why? Because our tax rate, specifically in Thailand, which is for us the key topic, is already exceeding the 15%. It is just temporary, because we have in some businesses, especially in our feed business, you will hear about that after, the end of our BOI. Our BOI has expired, and we will start a new BOI a bit later. So we have 1 or 2 quarters where the tax rate is a bit higher than usual. Okay, so in Q1, there is no impact from the global minimum tax rate.
And we're going to go to the online questions now.
How is the competitive landscape in international markets, and what is the rationale behind the need to actively invest in marketing?
So here, the competitive landscape, in our industry, the competition is very high. There is no change. It was already very high in the past years, and it will continue further. In Q1, we did something which is a bit unusual for us. We increased our marketing activities, especially in the UK, to support the Eco Twist launch. Just for you to remember, we have, can you show the picture of the Eco Twist Kunquan in the guidance? We did launch in Q4 the Eco Twist in the UK. It's a completely new packaging that we have. We moved from a plastic packaging to this aluminum packaging. This is a big change. Okay, in Q4, that was not the right time to do some marketing activities behind. In Q1, we did some significant marketing activities, which is unusual for us in Europe during the period of the year, to support the launching on that. We do this to explain to the consumers. Okay, you are changing the habits of the consumers. It's always very difficult. We are convinced we are going in the right direction, but you need to explain why are we doing this. You need to explain the quantity of the fish in the can does not change, and you need to explain many things. This is why we have been doing a lot of marketing activities in Q1. For you to remember also, for the whole year, we want to push our marketing activities. Okay, that this is already including in our guidance. We said in 23, 22, because of hyperinflation, we have to decrease overall our marketing activities since last year. 24, we catch up. In 25, again, we want to support behind our brands. We have been losing a bit of volume in our branded business in the past 2 years. We want to recover now that we have less pressure coming from the inflation.
Okay, next, we have several questions about the U.S. tariff, especially on the operation in Ghana and Seychelles. So for the first one, what percentage might it come down from 18% to how much if we invest in Ghana and Seychelles more?
I think here the idea is for us, you heard in our ambient business, the idea if the tariff are implemented at 36%, the idea for us will be moved from Thailand to Seychelles and Ghana. We believe Seychelles and Ghana can really compensate for Thailand. We don't need, again, any significant investment in this one. For the frozen, we'll have to see. And in the pet care also, we told you that all the competitors are impacted rightly the same way. Okay, Vietnam, also in China, roughly we have the same tariff compared to the rest of the region. So we don't expect any significant change, to be frank. It's just the mix in our factory will be changing. Instead of providing from Thailand, there will be more coming from our African factories. Right now, this is the scenario. In the case of a 10% tariff, which is there for a long while, we don't expect any significant change, okay? What you need to keep in mind is always the situation of Thailand and versus the competition, okay? If everyone is at 10%, it will not change the picture.
Okay, and if additional investment is required to expand the capacity, when could this expansion begin?
Very minimum. We don't need a big capex. We already built new cold storage in Ghana 2 years ago. And the capacity, it's already in place. So we don't intend to put any more big capex there. And you see from my guidance, I cut capex from 5 to 5.5 down to 3 to 3.5. So that's the plan.
Okay, and so next question is about the inventory. As the company has built 4 to 6 months of finished goods inventory, in how much the inventory days would it be extended? Would it be lengthened?
So we do expect, yes, a bit of increase. I think it will stay reasonable. In Q2 and Q3, there should be two effects: an increase of the inventories in the US, but then a decrease of the inventories in Europe, because this is just normal consumption. So the expectation would be, normally we are in a range between 150 days to 160 days. The expectation is temporarily will increase a bit to 160 to 170 days for Q2 and Q3, and then after it will drop again because of seasonality.
Okay, and before the tariff is actually enforced, have customers been placing more orders than usual during this period?
I think we did answer this one. We didn't see anything significant. Yes, some customers did it, but we didn't see a very significant impact on that. Some customers just asked to accelerate for that, but it's not that significant.
Okay. Next question is about the ROE. Do you have long-term ROE target, and will it be reached by operation improvement or better capital management?
Yeah,
Go ahead.
I think definitely from operation improvement. Understand our ROE now is about 9%, right?
7 Q1 24.
Yeah, of course, I want to see double digit. That's why we are moving our gross profit margin to exceed 20% plus. And with that, we should see a better return.
Okay, and if production is moved to Seychelles and Ghana, will labor costs increase? Overall, by how much will production costs rise compared to the base in Thailand?
Well, let's say conversion cost in Thailand, it can be around like $700 per net weight ton. In Ghana right now it's about 1,000. It can be down to 900. Seychelles is about 1,300. So that's the difference. But the duty, that's the key. If there is a big gap like 20% plus, of course, it will compensate whatever the cost increase.
Okay, one more question about Ghana and Seychelles. So if the production over there increased and we reduce the production in Thailand, will this negatively impact TUM? And what are the company plans for production operation in Thailand?
Well, if we assume the volume is the same, certainly when you increase one place, you have to reduce one place. And therefore, whatever we increase in Ghana and or Seychelles, then we will have to right size in Thailand. So that's natural. And remember, we've been ramp up our capacity in Thailand during COVID. So we may go back to pre-COVID time, right? So that should be one of the plan.
Okay.
The idea also is for our Thai factories to be more aggressive on the rest of the world. But we believe there will be some opportunities in the other countries outside of the US.
Yeah, I think what you should focus that Thai Union has global footprint. Thai Union has ability to move around within our global network. You don't have to worry much about Ghana, Seychelles, whatever. We will manage within our network. And when you see one country shift, maybe due to their advantage to US, they also lose something from the other market where it's opened up opportunity for us to get in. So the trade, it just flow, maybe unusually, and, we just need to be agile and tap whatever opportunity that come up. So Ecuador, they want to ship more to US, they may ship less to Europe. Right? So that's a key message. We have agility, flexibility to manage our global footprint. We are focusing on cost of goods sold, cost, balance sheet. Right now, cash is also our focus. So that's, I think, what you should be assured. At least we will survive through this turbulence.
Okay, so maybe the last question, given the current circumstance, how can we increase gross profit margin to above 20%?
Well, still, I would, continue the same strategy: product mix, premiumization, cost reduction, cost control. That would be the way to increase the margin. Yeah.
And keep in mind, right now the guidance for this year is 18 to 19%. The goal is always to beat the 20%, but we don't plan that for this year.
Are there any other questions? I would like everyone to rest assured you can remain confident that Thai Union, we are doing our utmost. Ever since the announcement of the reciprocal tariffs, even before that, we're always proactive. Whether it's reducing capex, lowering our costs, focusing on our costs in all of our factories or facilities and our global footprint, preparing our capacity, everything is ready. We are just waiting on when we should execute, and that will depend on the level of certainty that we see.
Okay,
moving
I would
forward.
like to thank everyone for joining us today. We will now take a 10-minute break and followed by the TFM result announcement. Thank you very much and see you in next quarter.
ขอบคุณมากนะครับสวัสดีครับ